Energy surges 2.45%, bullish trend gains momentum, but looming supply risks threaten to upend the rally. This is what every serious investor needs to know about energy right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we begin this week, spanning from June 8 to June 12, 2026, the overall market context is one of normal conditions, with the VIX at 19.6, indicating a moderate level of volatility. Within this framework, the energy sector is garnering attention for its recent performance relative to the broader S&P 500. Notably, the energy sector ETF, XLE, has seen a significant move upwards, posting a gain of 2.45%, which is a considerable shift. This upward trend in the energy sector is particularly noteworthy given the current geopolitical and economic landscape, which is influencing energy prices and, by extension, the stocks within this sector. As such, this sector deserves our attention right now, as it presents both opportunities and challenges for investors. Given these dynamics, it is essential to assess the sector's current state and potential future trajectory. This is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The energy sector, as represented by the XLE ETF, has demonstrated notable momentum, with a weekly change of 2.45% and a monthly change of 1.18%. The Relative Strength Index, or RSI, is currently at 52, which implies that the sector is neither overbought nor oversold, but rather in a neutral position with a slight bullish bias. This reading suggests that the sector has room to continue its upward trend without immediate concern for a reversal due to overbought conditions. The trend direction appears to be upward, with increasing conviction as the sector continues to build momentum. Key support levels likely exist around the recent consolidation area, while resistance levels may be found at the upper end of the recent range. The current move does not appear to be an overreach, but rather a sustainable breakout, as the sector has been consolidating for some time, building a strong foundation for further advancement. A specific technical setup worth watching this week is the potential for a continuation of this breakout, as the sector tests its ability to hold above the recent highs. Now let us look at the fundamental catalysts driving this sector. The energy sector is poised to be influenced by general macro conditions this week, with the VIX at 19.6, indicating a relatively normal market regime. Key stocks such as XOM CVX, COP SLB, and MPC are signaling a mixed sector health, with some showing resilience and others experiencing volatility. This week, we will be watching for any earnings reports from these major players, which could provide insight into the sector's overall performance. Additionally, regulatory news and macro data, such as inflation and GDP growth, could also impact the sector. As a reminder, this is educational content and not financial advice. From a fundamental perspective, the energy sector is driven by the ongoing balance between supply and demand, with the global transition to renewables being a key long-term theme. However, the short-term outlook is influenced by macro conditions, such as economic growth and geopolitical events. The sector's performance will likely be influenced by these factors, and investors should consider these dynamics when positioning themselves in the energy space. The fundamental thesis for being positioned in this space is based on the sector's ability to adapt to changing market conditions and the growing demand for energy. Next, let us talk about the specific risks you need to manage this week. The energy sector is currently facing several key risks, notably geopolitical tensions, supply chain disruptions, and commodity price fluctuations. Given the current volatility environment, with the VIX at 19.6, it is essential for investors to be mindful of position sizing, as sudden market movements can significantly impact portfolio performance. Unexpected headwinds, such as unforeseen global events or regulatory changes, can also pose significant challenges. To manage downside exposure, a disciplined framework is crucial, involving careful risk assessment, diversification, and hedging strategies. By adopting a proactive approach to risk management, investors can better navigate the complexities of the energy sector. This week's market dynamics underscore the importance of a thoughtful and adaptive investment strategy. And now for the strategic outlook, where does energy stand heading into next week? This week we maintain a cautious stance on the energy sector, given recent volatility in oil prices, commodities, and concerns over global demand. A key theme to track is the ongoing shift towards renewable energy sources. Please note this is educational content and not financial advice. If you found this video insightful, like, subscribe to Financial Market Oracle, and comment your energy watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.